Greg Becker was the president and CEO of SVB Financial Group, which is the parent company of Silicon Valley Bank. Before joining SVB in 1993 as a loan officer, Becker worked at Bank of America as a commercial banking officer. He has been a champion of the innovation economy ever since. He was born in 1969 in the United States and grew up in a family that valued education. He attended the University of California, Davis, where he earned a bachelor's degree in economics. Greg Becker has been very private about his personal life. He is reportedly married, but he has not revealed any details about his wife or children. He also co-founded SVB Capital, the company's investment arm, and served as the chairman of the Silicon Valley Leadership Group from 2014 to 2017. Greg Becker said several things at the last earnings call on January 19, 2023, that caused investors to worry about SVB's financial health and risk exposure. Some of these statements were: "We expect our net interest margin to decline further in 2023 due to continued pressure from low interest rates and excess liquidity. We have increased our provision for credit losses by $200 million this quarter, reflecting the deterioration of some of our loan portfolios, especially in the cryptocurrency and biotechnology sectors. We are facing some legal and regulatory challenges related to our involvement in certain transactions and activities that are under investigation by various authorities. We cannot comment on the specifics of these matters at this time, but we believe we have adequate reserves to cover any potential liabilities. We are confident that we have a strong capital position and a diversified funding base that will enable us to weather any market volatility or stress scenarios. We do not anticipate any liquidity issues or capital shortfalls in the foreseeable future." These statements raised doubts among investors about SVB's profitability, asset quality, compliance, and solvency. They also contrasted with the optimistic outlook that Becker had given in previous quarters. As a result, SVB's stock price dropped by more than 20% after the earnings call. However, you may have heard that Silicon Valley Bank collapsed last week due to a massive fraud scandal involving one of its clients. According to some reports, the VC that started the bank run on SVB was Peter Thiel, the co-founder of PayPal and a prominent investor in tech companies. He allegedly withdrew $10 billion from his accounts at SVB on Thursday, March 9, 2023, after learning about SVB's involvement in some questionable transactions and activities. He also advised other VCs and startups in his network to do the same. His move triggered a panic among other SVB customers, who feared that the bank would not be able to honor their deposits or loans. Many of them followed suit and withdrew their funds from SVB, creating a massive liquidity crunch for the bank. By Friday, March 10, 2023, regulators had no choice but to shut down SVB and take control of its deposits. Peter Thiel was a vocal critic of Silicon Valley's culture and politics, and advocated for moving tech innovation to other regions of the country or the world. Greg Becker, on the other hand, was a staunch defender of Silicon Valley's dominance and influence, and promoted SVB as the bank of choice for tech entrepreneurs and investors. Peter Thiel was skeptical of some of the sectors that SVB heavily invested in, such as biotechnology, cryptocurrency, and green energy. He preferred to focus on more disruptive and contrarian ideas that he believed would create a better future. Greg Becker was bullish on these sectors and believed that they would drive growth and innovation for SVB and its clients. These differences may have contributed to Peter Thiel's decision to withdraw his funds from SVB and advise others to do so as well. He may have also seen an opportunity to weaken SVB's position as a competitor, or a potential threat to his own interests. This was a shocking and unprecedented event that shook the financial industry and raised questions about SVB's risk management practice. He is accused of allowing the company to go down in history as the second biggest U.S. banking failure on record by failing to prevent or detect the fraud that led to SVB's insolvency. He is sued by shareholders for fraud, alleging that he and other executives made false and misleading statements about SVB's financial condition and risk management practices. He sold $3.6 million worth of SVB stock in January 2023, just weeks before the bank announced its troubles. This raised suspicions of insider trading and breach of fiduciary duty. He secretly panicked about SVB's risk exposure for a year before the collapse, but did not disclose it to investors or regulators. He also abdicated accountability in a 2-minute video to employees, claiming that he no longer made decisions at the bank. He paid employee bonuses hours before the FTC seized control of SVB, while depositors were struggling to make their payrolls. He announced a plan to raise $2.25 billion in capital and sell $21 billion in assets that caused a $1.8 billion loss and triggered a bank run. He invested heavily in U.S. Treasuries and mortgage-backed securities that lost value due to the Fed's interest rate hikes. He failed to disclose or mitigate SVB's risk exposure for a year before the collapse. He accepted a government bailout that raised moral hazard risk and rewarded bad behavior. Employees have mixed feelings towards Becker. They are angry with him for allowing SVB to collapse and failing to prevent or detect the fraud that caused it. They are disappointed with him for abdicating accountability and claiming that he no longer made decisions at the bank. Some are grateful to him for paying bonuses hours before the shutdown, even though it was controversial. Also, some are sympathetic to him for having a heavy heart and acknowledging the difficult situation. He also served on the board of directors at the Federal Reserve Bank of San Francisco until last week, when he resigned after SVB's collapse. Some of the bad decisions that the CEO of SVB made that contributed to its collapse were expanding too aggressively into risky loans and investments, especially in cryptocurrency and biotechnology sectors, failing to maintain adequate capital and liquidity buffers to withstand market shocks or customer withdrawals, ignoring or downplaying warning signs of financial stress, such as credit rating downgrades, lawsuits, regulatory probes and whistleblower complaints, misleading investors and regulators about the true state of SVB's finances and risk exposure. It is not clear what Greg Becker will do next now that SVB collapsed, but he is facing a lot of challenges and scrutiny. He was questioned by federal authorities who are investigating the causes and consequences of SVB's collapse. He may face criminal charges if he is found to have violated any laws or regulations. He lost his reputation and credibility as a leader and a banker in the tech sector. He may have difficulty finding another job or starting a new venture in the industry. Greg Becker has not made any public statements since SVB's collapse, so it is hard to know what his plans or intentions are. However, he may try to defend himself against the allegations and accusations, cooperate with the authorities, seek legal advice or assistance, or look for new opportunities outside of Silicon Valley.